options expiry.
Oh, absolutely, Nigel. Good morning. Well, it is largely a sector-specific market today, right? We have the textile stocks that are doing well. IT continues to see that upsurge that we've been seeing in the last couple of weeks. So, largely stock-specific, the mid-caps are doing well, and we have a lot to discuss on the show. So, let's take a look at the top headlines, and then we'll discuss those headlines in greater detail. Infosys first quarter numbers see revenue beat estimates along with a higher guidance even as margins miss street expectations. Stock sees slight profit booking in early trade. L&T Tech Services surges over 13% after first quarter numbers beat revenue and margin estimates. The company has also raised its FY22 guidance to 15 to 17% growth from 13 to 15% earlier. Textile stocks are buzzing in trade after the centre extends tax rebates and levies on apparel exports till March 2024. Brokerage house Equirus too has upgraded margin estimates on these stocks after the news broke. Marico trades higher after it acquires 60% stake in direct-to-consumer brand Just Herbs. And Dilip Bilcon trades lower after being barred from NHAI contracts for the time being. Craftsman Automation lower after first quarter numbers, while 5paisa Capital and Tinplate react positively to quarter one numbers.
Well, Sonal, at the start of the show, you said a couple of sectors are doing well. That's the tech stocks and textile stocks, and very rightly. Well, you're stepping in for Nupur and you're tracking the textile space. Tell us, how much of a boost is it for companies like Welspun India, Himmat Singha, the extension that we've got in terms of exports for these textile companies? Sonal.
Thanks a lot for that. Well, it definitely is a big positive for all these companies. It has come as a positive surprise. That is the management commentary that is coming in. Just to give you some perspective, Rostel, that is rebate for state and centered levies. This particular scheme has been extended to 2024. ROTTEP was to take over the scheme from January, but there was uncertainty. There were no rates that were told to the manufacturers. But now this policy forms an important basis for quoting the prices of the export products. And exporters were expecting these incentives to go down by 2 to 3% with the ROTTEP scheme coming in. But now these higher rates are a relief to the exporters. So Welspun India and Himmat Singh Seed, these companies had guided for lower margins for FY22. One, because of lower incentives, and second, because of higher raw material prices. But now Equirus says that this particular scheme will result in 300 basis points higher margins for both these companies, even if we consider the raw material price inflation. In fact, for Welspun, it's expected at 20% versus 17% that they had guided for. And now for Himmat Singha, it's expected at 19% versus 16% earlier that they had guided for. Arvind also should see a 200 basis points margin expansion according to this particular brokerage. Edelweiss also has the same thoughts. They think that industry had expected the rate under the new scheme, that is ROTTEP, to be much lower, and this has come as a positive surprise because it will lead to higher margin expansion for these companies, both for textile and garment players. So companies, they derive a sizable portion of their profitability via these incentives, and that's why they have revised Welspun India's EBITDA by 7% for FY22, 9% for FY23, and their margin estimates are expected at 21% versus 17 to 18% that they had expected earlier. They have also raised their target multiple, and that has resulted in increasing target price to 150 versus 121 earlier. All these stocks are up anywhere between 4 to 9% in trade today, Nigel.
Well, got it, Sonal. So, in fact, there was clarity that was awaited. Now we have clarity. The street was building on that some part of those benefits may not continue or could be lowered. That's not happened as well. So now it will help them be more competitive in the export markets. And in fact, it could be a bit of a booster shot as well for margins. Well, it's a good time, I think, to get, to our special segment where we get you a few ideas for profit. We have Madhu Chanda who's joining in to talk about a stock that she's tracking very, very closely. Madhu, over to you.
We are suggesting Kotak Mahindra Bank that has been a stark underperformer year to date. Despite having all the right ingredients for success, the stock has failed to enthuse investors as the optically expensive valuation was not backed by adequate growth. Not only compared to peers, but even relative to the industry, Kotak Bank's growth has been anemic. In more recent times, there have been worries about succession as founder CEO Mr. Kotak's term ends in December 2023. The bank, however, has seen growth acceleration in recent times driven by secured assets. It has adequate capital to take on capital-starved competition when the environment is right. The group has adequate senior management bandwidth as well. Asset quality continues to be best in class, and the bank has created a robust deposit profile with industry-leading CASA that enables it to maintain margin without compromising on asset quality. Finally, the group, with its exposure across financial services, is ideally placed to take advantage of financialization of savings in India as well as value unlocking in the future.
Madhu, thank you so much for joining us with that idea. But with that, we'll slip into a short break now. Xplio Solutions is the stock buzzing in trade on the back of a group strategic restructuring. We'll get chatting with Balaji Vishwanathan, the MD and CEO of the company, on the other side. Stay tuned.